Hey everybody, Gary with Basecamp Trading. Let's examine the crude oil market this morning as we were coming into the London trading session. When we first came in this morning, we were right here on this bar, and you could see crude was in a downtrend. The 5 had crossed the 13, price had moved below the 50 EMA and the 200 EMA, was pushing lower, and actually had a little consolidation right here and set up this bear flag. Now typically you would think this is a nice setup right here. Crude's in a downtrend, a little bit of consolidation, set up a 30-minute bear flag. We know we like to take 30-minute bear flag triggers or 30-minute bull and bear flag triggers, but there's a problem with this market right now. When you first come in, you need to take a look at what happened in the night session prior to when you got in. And you could see that crude had already moved over 100 ticks to the downside. The average true range in crude's been around 120 ticks or so. So at this point, crude has already made a very large move from the Asian session to the London session. So we need to change our expectations. If crude typically is only going to move 120 to 150 ticks in a day, and we've already wiped out 100 of it, it's not reasonable to expect a lot more to the downside. And you can see this is what crude did. Crude did move a little lower, moved a little bit lower, but you can see no follow through. Just kept leaving all these bottoming tails over and over and over and over. Right here, we did get a bear flag setup that coincided with a setup that we like to take on our Renko chart. And so we did take this bear flag trigger. Again, it was confirmed by a setup that we like on our Renko chart. Ended up getting a couple targets or $200 per contract. But then you can see crude just kind of chopped around and eventually headed back the other way. So it's important when you come in the morning to take a look at what has happened in the night prior to when you came in so that you can have proper expectations. And you can see on our Renko chart what that looked like. We came in right in here, and you can see crude just chop back and forth inside the 30-minute opening range. Had a slight downward bias, obviously, but we were actually setting up trend reversal breakouts back to the upside. In fact, a couple times we were thinking that that might happen. Now we had one set up right here. It did not trigger. And then we had another one set up right here which did not trigger. But then right in here, this is where we got our down, up, down pattern. And that was coinciding with that 30-minute bear flag that was triggering. Again, when we get a down, up, down pattern, and all of our moving averages are in alignment. In this particular case, we're below the smooth 50, below the cloud. 50 SMA is below all of that. 34 EMA is below the 50 SMA, and then price is moving lower off of that. This is a nice bearish trigger on a setup, and we like to take these, and this is where we were actually able to get 2 contracts off. Again, $200 per contract. However, we trade multiple contracts, and we were definitely taking profits early. We took multiple contracts off at the first target. Again, because crude just was not wanting to sell off this morning, and it's because it had already made a very large move already. So again, when you get ready to come in and trade, make sure that you have the proper expectations for your morning.